Wow, the weather nowadays in Singapore is insane, man. For those of you who are working outdoors, please take care of yourself and please hydrate. But anyhow, I think 293,500, that's the number that I would like to start this conversation or start this video with. And some of you might ask, hey, what's that number mean? That's essentially the amount of hours that we have managed to accrue over the lifetime of this channel. And if you were to really convert it to the number of live hours it is, it's equivalent to 33.5 years cumulatively. That's pretty insane. And if you were to ask me, when I started out on this YouTube journey to basically talk to myself, I would have never expected to garner that kind of attention and that amount of, I guess, lifetime essence that so many of you decided to give me or bestow upon me so generously. And I can also never be grateful enough for the 17,204 of you that actively decided to subscribe to this channel. So I think this video will essentially just be a conversation of my reflection over the last 3 years. So the first video that I posted on this channel that essentially got quite a bit of traction was on the 10th of April 2021. And I think today is the Good Friday, which is why you kind of see me filming in when the sky is still bright. And I just wanted to kind of share my own personal journey. I am aware of this sort of parasocial relationship where the creator is basically just sharing and the viewer that is on the other side of the screen know a lot about the creator, but I basically don't even know any of you. So I think I just wanted to kind of start off this conversation by sharing my backstory on how I got started investing. I think simply put for me, it's a very natural way of progression because my dad himself is an investor, and a lot of the lessons that I took away from and what I learned even before going to university, because some of you might know I graduated with a finance and an accounting degree from uni, so it's kind of my bread and butter to know some of these terminologies and to understand finance on a deeper level compared to many, because there was some sort of formal education. But for myself, it was a natural process because my dad was an investor. He's a Singapore-based investor. He concentrates most of his positions in the SGX market, and a lot of the things that I learn about just naturally get distilled to me as he shares about his learnings and his idea of the stock market. So it was really a very natural process. And I really got started or got more serious when I was in army. So for those of you, for my foreign viewers, for those of you who don't know, I think when Singaporeans turn 18 or 19 years old, after they finish JC or Poly, which is high school equivalent, I believe, pre-U, I think, they will all be enrolled or conscripted to the army, and we basically have 2 years to serve the country. So I think within that 2 years, I was given a lot of time and bandwidth to really reflect on life and to pick up a lot of skills. So I started reading very widely, from philosophy to business breakdowns. And then only thereafter, probably in the 1 year mark, then I started picking up on many of these investing books specifically. And on top of what my dad has been talking to me since young, that's when I started building on the foundations of my investing career, if you can put it that way. So I really started off not even ETF investing. So specifically for my dad, he's also into stock picking. So he picked individual stocks and he tried to outperform the market. And I think back then, 10, 20 years back, there really isn't this idea of ETF investing into US index funds, etc. So Singapore-based investors, you just naturally buy into Singapore stocks and get into the dividend game. And for myself, because I think back then we managed to accrue some sort of savings. I believe it was around $5,000 to $10,000. This was before I entered army. I had $5,000 to $10,000 savings from all the Hong Pao money, which is from the Lunar New Year. So my dad basically gave me a pitch. He said that this $5,000 or $10,000 sitting in your bank account, it's basically yielding close to nothing because the banks basically pay you zero interest. So he told me that, hey, back then there was this company called Keppel Corporation. For Singapore-based investors, you guys probably know of the company. It's a Singapore blue chip. It's an oil and gas company, and they have very steady dividend yield. And a lot of these Singapore tickers all focus on giving back shareholders or benefiting shareholders in terms of dividends. So he told me that, hey, back then I believe the yield was closer to 4%, 5%. And he said that $5,000 can buy you one lot of Keppel Corp. They were trading at around $4 or $5. And back then, one lot was 1,000 shares. So he said that, hey, I'm buying, let's say, X amount of lots and I can lend you my account, because back then I believe I was like 15 or 16 years old. I couldn't legally open a brokerage account. So I was thinking, hey, why not? And my dad even threw in a kicker or booster, telling me that if you lose any capital from here, so let's say capital is at like $5, if it goes down from $5 and I wish to cash out, he will basically buy it over from me at $5. So in this specific instance, there's literally zero downside. So I basically just parked the money with him. So Webull has once again leveled up their game. You can now enjoy extremely competitive trading costs with Webull, as low as 55 cents US dollars per contract for options and 50 cents US dollar per order for stocks and ETFs. So for new and existing users, they are currently promoting their transfer-in campaign, which allows you to earn up to 3,000 US dollars worth of free Nvidia shares when you initiate a shares transfer-in request from another broker that is worth more than 25,000 US dollars. So to defray any potential additional costs, Webull has also offered a max transfer fee subsidy of 150 US dollars. So for me, Webull has been one of the trusted brokers that I use in my own investment journey. So I enjoy using their platform as they provide me with a seamless investing experience with extremely user-friendly interface and also custom layouts. And sometimes we just want to get a better understanding of how the price action chart is forming, and Webull's interface has been very intuitive. So for new users, they provide really attractive sign-up rewards as well, and more details will be in the link down below. Thank you Webull for sponsoring this video. So I was actually getting back a few $100s, and that was my first time interacting with this idea of dividend investing and also getting air quotes free money. Of course, it's not free money, it's just taking appropriate amount of risk to get back certain level of rewards. And that was the outcome that I was kind of accustomed to. And yeah, we are basically an investing household, which is why I kind of started early. Earlier than my peers, might not really be early per se. So yeah, that was back then. In my JC and in my army days, I was already kind of attuned to the stock market, understanding what is a stock, what is a company, why is the company making money, why are they able to return money to shareholders, and all that jazz. And I think in one of my separate videos, I've also shared that my dad kind of inculcate some tidbits of nuggets of wisdom as and when. And he talked to me a lot about the idea of leverage, telling me to stay away from leverage. I think because back then in the 98 financial crisis, the AFC, Asian financial crisis, he was burned because he was heavily leveraged. And that kind of distilled upon me that even up till today, I have yet to use any form of leverage. I'm highly discouraging people from using leverage, and you can't lose money, or please don't play with money that you cannot lose. To my next phase of life, right after the army life, I went to university and I got a placement because I believe that I did pretty well for my A-levels. Not the best, I didn't got full marks, but good enough to enter a program that I was quite interested in, because it was like I said, it was a natural process. I had an investor mindset. I came in looking into businesses and wanting to be an analyst, and maybe even pursuing a career in the public investing realm, whether it's in a brokerage firm, whether it's in an equity analyst role, etc. So I went intuitively into a finance degree, a business degree, and then later on trying to specialize in finance. And because I did okay, that's why I took up a double degree offer, and I did accounting as well. So that's why I later on graduated with an accounting degree and a finance degree. So that was my backstory. And going to university, I was exposed to many different modules and different ideas, concepts from CAPM, I think capital asset pricing model, you have Black-Scholes model, and all your traditional compounding interest, time value of money, all these very simple to complex concepts. And I always had this very big question in mind. What am I learning this for? I learned a lot of all these complex concepts. I'm able to manipulate some of these math equations, complex equations. But what's the implication? Am I able to apply it? I was seated in a room, or a conference room, or in a tutorial room with a group of, I think, 40 other students. And I was thinking at the back of my mind, so are we actually making money? Or even for the lecturers in the university, are they actively employing some of these concepts that they are learned and taught to the investment world and to earn outsized return or outsized alpha, like those investing people would like to say? And then I came to realize that, hey, between reality and And between theory and reality, there's still a very huge gap. There's a lot of things that an investor has to learn, and the only way for you to learn it is by experiencing it. Yeah, you can talk about valuations being important and buy when it's undervalued, sell when it's overvalued, try to construct the best kind of portfolio. But then I guess one thing that is very underrated is really the idea of the operator, which is the human being. Why is there the ability for people to earn outsized return? It's really because of the fears and greeds of the market and being able to take advantage of these different opportunities. If not, I think a lot of all this theory, they can stay in the classroom, but real world application, I think it's very lacking. And even for my lecturers or people that study to PhDs, having 2-3 PhDs, it might not necessarily guarantee that they are a good investor. And I oftentimes joke with my friends or even talk to my professors, asking about their returns and asking them to open up their portfolio so that we can kind of learn and know where they are standing. But I think up till now, nobody really took me up on the challenge, and none of my professors actually showed me how they've performed thus far in the market. So I think it speaks volumes in terms of just learning in theory versus executing in action in real time. So that's really just my understanding of the finance degree in general. Even extending it to people that are that have like the CFA, the Chartered Financial Analyst role, or the program itself. You might think that it's the pinnacle, but a lot of people that have CFAs and they are managing funds professionally, there are a lot of literatures and existing case studies that tell you why a lot of them underperform due to a myriad of reasons. So one thing that I kind of took away from the earlier phases of my life is that if I were to indulge myself or to participate in something that I tend to be naturally interested in, I tend to do better than relatively to my peers. So I think in secondary school, we were forced, air quotes forced, to take like 8 or 9 subjects. And there were definitely subjects that I was doing better in, and there were subjects that I was not doing as well. So you can see that when subjects that I do well in, I tend to do better and better. And subjects that I don't really do well, it goes into a negative reinforcement cycle. Because you don't do well, and then you don't want to put in more effort, and then you don't study as much, and then you get worse results, and then the cycle repeats. And then the reverse is also true. So for myself, when I went into JC, I think my parents, or at least my mom, had the impression that, oh, Singapore, we are very STEM focused. You have to take science and math and economics because those are very practical, pragmatic kind of subjects that most Singaporeans like to take. So I think it's the most typical kind of subject combination is PCME, which is physics, chemistry, econs and math. Basically, I think 50% of the cohort all take PCME or BCME, which is bio. So those are the science and math combination, because the science combination will kind of guarantee you in a science spot if you would like to continue pursuing it in university. But if you were to take a humanities kind of subject, maybe geography or history, you can't pivot over to a science role subsequently. But the reverse is true. If you took a science, a subject combi, you can still go into a humanities role in university, which is why there's this outsize or imbalance. And I was kind of pressured to go into that science stream. But then I told myself that, hey, since I already got into JC, which was quite surprising. I thought I would have went into poly. So I was thinking, hey, why not just take something that I was interested in? And back then, I was quite a humanities student. I did quite okay for geography. I was interested in economics naturally. And I think math was just a normal thing for most Singaporean kids. We all need to be kind of good in math, and typically Asians are quite good in math. And last but not least, I took a chemistry, but I took it on a H1 level, which is subpar level. And I think in A-levels, it has kind of proven the point to me again that when I took a subject that I was really interested in, I naturally excelled in it. Of course, I was not good in science, so my chemistry took a back seat. But I think for the rest, for most of my pillar concepts and pillar subjects, I did okay. So, which kind of reinforces the idea that a lot of people say that, oh, don't convert your passion into your work, or try not to do something that you like. You can keep it as a side hustle. All that said, I do agree, but I think we all have something that we enjoy, and I strongly encourage a lot of people to continue pursuing it. And don't let your dreams die down just because realities of the world, you have to start a family. I think human beings, at the end of the day, I do believe fundamentally that we are creators and we like to build things. So we should always have something that we are building on the side and creating and providing value to the world. So that's just my very short takeaway in my earlier phases of my life. So now, I think moving on, how I started on YouTube. So I think my initial motivations were quite simple. Back then, during the lockdown in 2020, there was an uproar in the number of people creating content. I guess because people were bored, and back to my point, I think we are natural creators. So a lot of people were bored, and I was consuming a lot of content because there was literally, I have every time in the world. I didn't need to travel, I didn't need to go to school anymore, everything was done online. And I started consuming more and more finance content. So previously I was not consuming as much. I was probably just reading off some Seedly articles and dollar and cents, which is very localized news. But then I started going onto YouTube, and then I see more and more younger investors, people talking about crypto, people talking about anything under the sun. And I was thinking, hey, why are all the creators either US based, UK based, Australia based, and they are naturally just Caucasians? And there's really a huge underrepresentation from the Asian side of things. After 2 or 3 semesters in, I was doing more finance related things, and I wanted to take charge of kind of my investment portfolio. Because remember, I was still investing with my dad. So I basically cashed out most of my Singapore positions, and I brought it over to basically the US market, and I started studying even free courses or free online YouTube videos like from Professor Damodaran. And I really just went rabbit hole into it. And I kind of discovered that the Hong Kong market was kind of undervalued, and that was essentially how it kickstarted this whole idea of talking about Alibaba and how Alibaba became my biggest position. And at my earlier stage of my life, I was basically 100% all in, because I think the amount back then was negligible, or I was thinking at the back of my head I could have lost this entire amount. So I didn't mind basically betting on just one company and betting that my thesis actually come true. So that was how things eventually started. And I really just pivoted to individual stock analysis and making more focused kind of content, which inevitably means that there is a much smaller scope of audience that are interested. But I'm still happy that I guess 17,000 of you happened to stumble upon my video. So I think at the start, I was really the enthusiastic creator that didn't really know much. I was that young punk. I believe back then I was getting like 2, 3, 5 comments, and I was very excited because it means that people are engaged with your kind of content, and people are basically listening to you and then making their opinion. So I made it a habit that I wanted to reply to every single comment back then. And slowly but surely, as the views and the reach gets higher, it gets more and more kind of toxic in a way, because I'm in that China, I'm in this specific niche that is the China investing space. And as we know, as the geopolitical temperature kind of spike up, a lot of people are getting more and more agitated from both sides of the aisle. People are getting louder and louder, and they are basically just shutting down your opinion, and it gets very political, it gets very messy and very toxic. And I think back then, when I was still younger, I really just wanted to, when somebody wrote me an essay, I would write back an essay to basically counter point by point. However, I've realized that it's not sustainable, because as things grew by and as I mature, I really don't have so much time to entertain many of these topics. And I was still a staunch believer of freedom of speech. That's why I allowed them to continue on. And I've realized that it goes back into a reinforcement loop that is not very healthy. Because I allowed them to be there, they kind of become more and more negative, and they throw in a lot of these comments, and it's always the typical few people. And then that's when I realized that, hey, maybe I should do something and to kind of block them out. I think for now, my way of dealing with some of these comments is really I just don't look at them. I just kind of, sometimes I don't even block them. So I think if you go back to my previous videos, there are still those comments lingering around, and I just disengage. So my kind of coping mechanism was to just disengage. And I don't want to take away your freedom of speech or your right to comment, but I just don't want to engage as well. So that's kind of how I improved or I guess look at it. And you can see, really, if you have to scroll through my library of content, I have 400 over pieces of content, and around 200 to 250 to sometimes even 300 is about Alibaba. And Alibaba has intrinsically became my identity, which might be a healthy, or some might call it an unhealthy thing. So I guess that's just my own perspective on it. So I think back then, when I was much younger and much freer, and I was in uni, I was doing nothing much. I had a lot of free time on my hand. I was basically on the grind. I was on the hamster wheel. I was churning out 2, 3, 4 pieces of content per week. It's definitely unsustainable. For people that is able to keep up to this kind of cadence and speed, they are either doing it full time or they're retired and they have nothing better to do. So that's just my perspective. And as I kind of matured, I kind of lost touch, and I think life really caught up to me. I started seeing someone, and then I started traveling a lot more because of the COVID restrictions being lifted. I started my full-time job, And I think generally I became a much lazier person, which is something that I need to be accountable for. But I think generally that was what transpired over the last 3 years. And you can see it's really a lifestyle choice and just not sustainable in the long run. So I'll talk more about what I have in mind in the later part of this video, but I'm just sharing what essentially happened over the last 2 to 3 years. And I think one thing also is there was some sort of a strategic misalignment where the incentive loop for YouTube is to be consistent. And if I'm not consistent, I'll get lesser views. And if I'm not talking about something that the audience is interested in, YouTube will punish me by not publishing or pushing the video out. And it became a reinforcement loop. And because of that, I got tunnel vision into just talking about Alibaba, because by talking about Alibaba, I kind of know what kind of views that I get. And if I pivot out, for example, you can just look through my content library, I don't get as many views, relatively speaking. Even though I'm still extremely appreciative of the baseline views, like 3,000 people of you, just watching whatever that I push out. And you guys are probably the loyal bunch that I'm very, very appreciative of. But you guys, there's this hedonic treadmill that you get accustomed to this new baseline, and then you get very comfortable and you don't want to get out of it because, hey, so you know that for the same type of effort you can get a certain level of views, but then why would you want to explore something further? Which is why it kind of tunnel vision and just spiral downwards from then on. So I think back then when I was like 22 years old, 23 years old, naively, I really thought that people in general on the internet will be very appreciative of a lot of the free things in life. So a lot of things that I created at the start of the YouTube channel, like maybe 1 year in, about a free Discord channel, a free Excel DCF that I put in the link of the description. I don't even collect email addresses. Some of the learnings that I learned from school and university, I paid good money. My degree was around 40,000. I paid good money to learn from professors and from esteemed people in the industry, and I basically tried to teach it or try to give it for free on YouTube. And I also sometimes came across certain deals from some of these brokers. It kind of feels that it's really a good deal, and it's something that I use for many of these brokers, and it feels stupid for you to not take the free money that they wanted to acquire customers. And when I keep sharing, I just get jaded because people are not appreciative, people are scolding you, blah, blah, blah. And I'm thinking, why am I spending so much time? And it goes back to the incentive misalignment again. Why am I spending so much time, so much effort talking about things, filming myself, preparing for slides, editing, and I'm not even getting a lot of money from YouTube. And I can be perfectly transparent here. My sponsorship content, it's not a lot compared to a lot of the bigger creators because I'm still very niche. And also, I don't accept a single cent from any of you. I don't have any sort of paid membership. I don't sell any of courses or whatnot. I've shared it before. For the amount of time that I'm spending on YouTube, if I go and take a part-time job that pays I think now the market rate is probably 10, 12 or 15 per hour, I'm probably earning much more from there. But it's really if you were to ask me what's keeping me going, it's really, I guess it's my passion to share and my passion to, I kind of feel disappointed, or I would feel disappointed in myself if the people that are out there, like really loyal viewers, 2,000-3,000, I learned something new and I don't share it to you guys because I think that it might level up your game or to allow you to have a better appreciation of finance or whatnot. So that was really my driving force. Right now, I think over the last few months, you can really see I slowed down a lot. 4 videos a month, 6 videos a month, sometimes if you're lucky, 8 videos a month, but it's really not my priority right now. And I can feel that in my bone that I'm getting very lazy and I want to be accountable for my actions. So, which is also why in this entire reflection video, I wanted to talk more about this idea of really being lazy and not having a framework or not having a structure to these things, because it's really just good to have, and it's not something that I really rely my life on with YouTube. And more importantly, because of this idea of incentive guiding actions, I believe that no matter how nice somebody is, how long is he or she going to be able to keep up if the incentive is not aligned? Especially if that person is a nobody. So like myself, I'm not a millionaire, I'm not a billionaire, I'm not doing philanthropy. There's really no incentive. I can see why many channels start to slowly die down, because the numbers just don't make sense and the time can be better spent elsewhere. So I think back to the monetization model of this channel, actually AdSense is my bulk of my income. Even sponsors don't pay me that much, contrary to popular beliefs. I guess my initial model or my initial perspective was really, I found a really good deal, and even some of these channel sponsors, they're really giving very easy return on investment, and you don't even have to jump through much hoops. They are really very aggressive in terms of user acquisition, and that's why they are trying to encourage you to get onto their platform. And for people that I talk about, or for sponsors that I talk about, I really use their platforms, and that's why you can see that many of my disclosures or my portfolio is kind of spread out in like 4 or 5 different brokers. And yeah, I think it's quite stupid for not taking advantage of some of these opportunities out here. So I guess that's just my perspective, but a lot of people can have their own opinion. And I guess it's really just trying to strike a balance. I don't want to just flood my videos with just sponsor messages and sponsor content. And also, that's it. I think it's also not kind of sustainable to just rely on AdSense and whatnot. So yeah, I guess I'm still trying to find the perfect balance, but I guess we just learn from it. So I think in this video, you have sat through a good amount of my sharing from my early phases of my life until today. And I just wanted to maybe give a few of my reflection pointers just at the end of this video. When I go into my YouTube analytics, literally 96% of you that are watching me, you guys are older than me. And I sometimes do second guess myself into understanding what value do I deliver, and why are all of you that are much older than me, probably much richer than me, listening to me. So I'm quite curious, so if you don't mind, please feel free to leave in the comments below why you are following me. But that's it, 96% because I'm 25, turning 26 this year, and more than 96% of my audience are above the age of 25. So a lot of people that are older are more interested in my videos compared to like kids that really don't have a lot of disposable income and they are not really concerned about money at this stage of life. I think this is something that I really cannot use words to describe. And it's really just some sort of a benefit that I didn't see, an intangible benefit that I didn't see when I started out this journey. So yeah, I really just wanted to thank you guys. This is my first reflection. I can't use words to describe, but yeah, I can't be even more thankful for both the platform and also for the people that I connected with over the last 2 to 3 years. So yeah, thank you guys. And the second reflection that I have is really having this platform itself is both a blessing and a curse. Blessing meaning all the benefits and all the blessings that I've gotten, and also the curse being you start chasing a lot of all these vanity metrics and wanting more and more views, wanting more and more recognition. And I guess that's really how social media works. You have million-dollar engineers, software engineers trying to engineer this platform to get people more addicted from a consumption perspective and also from a creation perspective. So I think for myself, I want to be more accountable for what I create and to really dig deeper into understanding what value that I bring. I don't want to create just for the sake of creating and because I want to be relevant, I want to be consistent, and I just want to create because I need to appear 2 times a week to make sure that I'm in your feed and you don't forget about me. So I think at least it's my public declaration. I want to be accountable for my actions, that I'm getting very comfortable in my routine. If I want to just get 10,000 views, I'll just talk about Alibaba, and I think that's a very unhealthy kind of relationship with the platform. So I've spent more time thinking and learning, and rather than just run on the hamster wheel, churning out the same thing, I want to be more intentional with my content that I create and be more intentional with the amount of sharing and the type of value that I bring to this platform. So that's just my own reflection for the 4th year and coming when I'm doing YouTube and doing providing content on this platform. I also expect to write more this year, so please feel free to come to my Substack. I think at least for myself, I want to kind of crystallize and to be more specific with my thought process and to really jot down my learnings. And a lot of time we just think, and then it becomes like a passing cloud. You just think about it and then you forget about it. So I believe that the process of writing, the process of creating, the process of talking, it crystallizes my thought and it makes me a much better thinker and a much better investor in totality. So that's why I want to be writing more. And for those of you who want to follow on this journey, please, the Substack link is in the description below. And I think the last reflection is that I want to always remember my identity. Yes, I do have a significant exposure to Alibaba, but I would still want to share a lot of my investing learnings, and my portfolio doesn't consist of only one stock. And for those of you who are interested in this journey, please feel free to follow along. For those of you who are not, you can continue tuning into only the Alibaba specific content. And I just want to focus on this idea that I'm an investor first and a creator second. I'm not a creator first. So I shouldn't be just focusing on just trying to optimize for YouTube views and to really just churn that AdSense dollars. I should be sharing things from the bottom of my heart. And yes, some of you have been complaining that I've been a little bit more clickbaity in my title, but I guess it's just a natural process of life because that's what the packaging of the video itself requires that sort of delivery, and in order for it to be more exaggerated, which is why you see headlines, they tend to be more negative, even though the world is becoming a much better place. So I think from that perspective, I just hope to be able to deliver enough value to kind of commensurate that so-called clickbaity title. I'm not saying that I'm going to change all the clickbaity title to non-clickbaity, but I guess I want to really just focus more on trying to provide value, and I'll let the rest sort it out on themselves. So I do have a few interesting ideas that I wish to deliver on this platform, and you guys can probably expect more in 2024. Please don't pack your expectations to a very high level. I just want to manage your expectations, but I'm willing, or I'm interested to just explore more than the current kind of slate of content or the slate of delivery that I have over the last 2 to 3 years. So that's just that. And I think last but not least, I just wanted to kind of ask or check in with you guys on what do you guys expect from me? What are you looking forward more of in the future? And the previous question that I asked, why did you even tune in to basically follow me or listen to me? So yeah, feel free to leave in the comment section down below as well. And really, this is the last part. I put a post on my community tab asking you guys what you guys want to ask me because it's Easter Sunday and it's Good Friday. So if I have time, I'll try to reply to every single. So with that, I'll see you guys in the next video. If not, hopefully in 2024, we'll finally see the Chinese dragon waking up, and I'll see you guys on the moon. Goodbye.